Good morning and welcome to the Killik & Co market update. We've seen some quite big moves in UK markets this week following the latest UK inflation data. UK inflation for April and for May came in at 8.7%, and there were some concerns that it was stuck at that very high level. The figure for June was expected to be 8.2%, but it came in at 7.9%. It's still way above target, but it's a relief to see it moving in the right direction. We can look at the breakdown of the data and see the inflation for different goods and services that make up the overall inflation data. The May data is shown in pink and the June data in green, and you can see we've had a decline in almost all of those categories. Food inflation at the top there is still uncomfortably high, but what's particularly interesting is the negative number for transport at the bottom there. That's come down because of a fall in the cost of motor fuel, which has come down because the oil price is lower. Brent crude is actually down over 20% in the last year. Here's the 5-year chart. You can see the rise after Russia invaded Ukraine, but more recently that price has come down, and that's largely because people expect a slower economic growth rate over the short term, especially from China, and that will hit demand for oil. Food inflation has also been impacted by the Russia-Ukraine situation. Here's the price of wheat, which is one of Ukraine's major exports. The price spiked after the invasion when Russia blocked exports, but then it declined again when Turkey brokered a deal to allow wheat exports to continue. This week that deal expired and the price has moved higher again. The lower inflation number for the UK will have a bearing on future interest rates. Last week, the expectation was that the UK interest rate would have to rise to over 6%, but now that inflation has come down, the expectation is that interest rates might peak at a level below 6%. We can see this by looking at the yields on offer in government bond markets. Here's the 2-year UK government bond yield and how it has changed over the last 2 years. It was barely above zero in summer 2021. It was over 5.5% earlier this month, but now it's retreated to below 5%, showing that interest rate expectations have declined. Lower interest rates tend to be positive for real estate investment trusts, infrastructure investment trust, and property companies, and we saw some big moves in these when the UK inflation number came out. London Metric Property was up 6.9% on that day, Digital 9 Infrastructure up 10.2%, and house builder Taylor Wimpey up 6.8%. We're at the beginning of quarterly reporting season now, so the next couple of weeks will be very busy with results. Last Friday, after this video was published, we had results out from UnitedHealth Group. The results were a positive surprise and shares went 7% higher on the day. UnitedHealth Group is known for being a major insurance company, but about half its profit actually comes from its Optum division, which is a technology-enabled healthcare services business with a big focus on data analytics. Revenues for Optum were up 25% versus the previous year. There's a lot of focus at the moment on companies that own and analyze their own large data sets, because these companies could potentially be beneficiaries of artificial intelligence. Do give us a call if you'd like to hear more about our thoughts on this. Moving on to have a look at next week, you can see it's very busy on the corporate calendar. We've got results out from some of the big tech companies, Alphabet, Amazon, and Microsoft. That's it from us. Enjoy the weekend, and we'll see you next Friday.